Hi friends, in this video we are going to discussing about mock test of chapter 7 NISM series 5A Mutual Fund Distributors Exam. First question, which of the following charges are excluded from the TER of a segregated portfolio? Option A, audit charges, option B, trustee fees, option C, advisory fees, and option D, custodian expenses. Correct answer is option C, advisory fees. Next question. A fund has total expense ratio of 1.25% and AUM of 720 crore. Then what is the annual expense? Option A 9 crore, option B 8.25 crore, option C 7.5 crore and option D 10 crore. Correct answer is option A 9 crore. Annual expense formula is AUM into TER. Then 720 AUM into 1.25% TER equal to 9 crore is the annual expense. Next question. In case of a credit event, SEBI allows segregation of option A gilt securities, option B equity portfolios, option C unrated or defaulted debt securities and option D exchange traded funds. Correct answer is option C, unrated or defaulted debt securities. Next question. Which of the following component of the NAV formula accounts for scheme liabilities? Option A, unit capital, option B, gross asset value, option C, exit load, and option D, accrued liabilities. Correct answer is option D, accrued liabilities. Next question. An investor redeems 1000 units of a fund with NAV 45 rupees and exit load is 1%. Then what is the redemption amount? Option A 45,000, option B 44,550, option C 44,850 and option D 46,000. Correct answer is option B 44,550. Next question. Total expense ratio TER must be disclosed. Option A once in 6 months. Option B daily on AMC and AMFI websites. Option C annually with AUM updates. And option D only in SAI. Correct answer is option B daily on AMC and AMFI websites. Next question. If a scheme has total assets worth 500 crore, accrued income of 10 crore and liabilities of 20 crore and 48 crore units are the outstanding, then what is the NAV? Option A 10 rupees, option B 10.21 rupees, option C 10.60 rupees and option D 11 rupees. Correct answer is option B 10.21 rupees. NAV formula is total assets plus accrued income minus liabilities divided by number of outstanding units. Then substitute all the values in the values. Then the NAV will be 10.21 rupees. Next question. Which of the following gets credited to the scheme's assets? Option A exit load collected, option B entry load, option C GST refund and option D distributor margin. Correct answer is option A, exit load collected. Exit loads are not retained by the AMC. They are credited back to the schemes for fairness. Next question. A fund pays out 2.5 crore as dividend. The source of such a payout as per SEBI rules must be option A, unrealized capital gains, option B, asset appreciation, option C, realized distributable surplus and option D, sponsor contribution. Correct answer is option C, realized distributable surplus. Next question. The decimal places of NAV of debt schemes must be disclosed up to option A 2 decimal places, option B 3 decimal places, option C 4 decimal places, and option D rounded to the nearest rupee. Correct answer is option C 4 decimal places. For debt or index schemes up to 4 decimals. For equity and balanced schemes, disclose NAV up to 2 decimal points. Next question. What happens to NAV when an exit load is applicable? Option A, NAV increases. Option B, NAV is unaffected. Option C, NAV is reduced directly. And option D, NAV is recalculated weekly. Correct answer is option B, NAV is unaffected because exit load is deducted from the redemption amount, not from the NAV itself. Next question. If the AUM of a fund falls significantly and expenses remain fixed, the TER is option A increases, option B decreases, option C becomes 0, and option D remains constant. Correct answer is option A increases. Lower AUM means fixed expenses become a higher percentage of assets, then increasing in TER. Next question. TER impacts investor returns because option A it is added to NAV, option B it is deducted from scheme assets, option C it's charged at entry, and option D it's paid to SEBI. Correct answer is option B it is deducted from the scheme assets. Expenses reduce net assets, thus reducing NAV and returns. Next question. If a fund has net assets of 300 crore and 25 crore units and distributes 10 crore dividend, then what is the post-dividend NAV? Assuming NAV was 12. Option A 12, option B 11.60, option C 11, and option D 10 rupees. Correct answer is option B 11.60. The post-dividend NAV formula is net assets after dividend divided by number of units. First, we need to calculate net assets after dividend. The formula is total assets minus dividend distributes. Total assets is 300 crore and dividend is distributed 10 crore. So, it is 290 crore of the net assets after dividend. Then, substitute these values in the formula of post-dividend NAV. Net assets after dividend is 290 crore divided by number of units are 25 crore equal to 11.60 is the NAV. Next question. Under SEBI rules, AMC's accounting for schemes must option A combine all schemes, option B maintain separate books for each scheme, option C include bank holdings, and option D follow RBI guidelines. Correct answer is option B maintain separate books for each scheme. Next question. NAV reflects the market value per unit of a mutual fund is option A after GST, option B before dividend payout, option C after accounting for expenses, and option D based on asset purchase cost. Correct answer is option C after accounting for expenses. Next question. The daily NAV must be published option A by 6 p.m. on AMC website, option B by 11 p.m. on AMC and AMFI websites, option C by 9 p.m. on AMC and AMFI websites, and option D weekly in SEBI bulletin. Correct answer is option B by 11 p.m. on AMFI and AMC websites. Next question. Trial commissions paid to distributors option A are included in NAV, option B are part of scheme's expense ratio, option C are paid separately by investors, and option D do not affect TER. Correct answer is Option B. Distributor commissions are part of the TER deducted from the scheme's assets. Next question. On redemption, an investor receives 13,860 for 500 units. Then what is the NAV if exit load is 1%? Option A 28 rupees, option B 27.5, option C 29 and option D 26.80. Correct answer is option A 28 rupees. First we need to calculate the total value of the units before the exit load. Let's assume XP the total value of the units before the exit load. The exit load value is the 1% of the total value. So it is 0.01x. The redemption amount is the total value minus exit load. X minus 0.01x is the 13,860. Now simplify the equation, then the value is the 14,000. Now substitute the value in the NAV per unit. Total value divided by number of units. NAV per unit is the 28 rupees. The NAV of a scheme fell from 17 to 16.5 in a week. Then what is the return? Option A minus 3.23%, option B minus 2.9%, option C minus 1.47% and option D minus 0.5%. Correct answer is option B minus 2.9%. Next question. An AMC overstates NAV by not accounting for a 2 crore liability. Then what is the impact? Option A overstates unit allotment, option B understates NAV, option C overstates NAV and option D increases TER. Correct answer is option C overstates NAV. Thank you for watching my video. Please subscribe for more chapters.